Hi everyone, and welcome back to the Wealth Rooms YouTube channel. I am Grant van Sale, and today we've got a great surprise for you. We have got arguably the cleverest man in South Africa with us, Wouter CFA from Sasfin. He is an absolute legend. Welcome for joining us.
Thank you, Grant. Thank you for having me. What an introduction. Now, the bar's really set high now.
No pressure, Wouter, whatsoever.
No pressure.
So, Wouter, today's video is all about investing offshore and trying to figure out the space over there. Tell us, is it still a good time to go offshore at the moment?
Well, I think we should never get too emotional about it and start saying what's wrong in South Africa and what are the better opportunities offshore. But I mean, just to look at the facts, I mean, South Africa still makes up only 0.46 probably of the global markets, and the basket is so much bigger offshore. I mean, we really have the opportunities offshore, and currently the environment is attractive. I mean, we also want to chat about where is this world going post-COVID, and we're really moving into a more digital world, and we don't see the local companies really investing into those transforming trends that will transform our economy over the next decade. So really, it is the opportunities that we have, the opportunities offshore. So we need to look at offshore markets. I mean, we have the US, Europe, China with some interesting technologies as well. So we need to look offshore for those opportunities.
You know, I absolutely love that position and the view that you've just taken, because so often we get caught up in this whole emotional turmoil of this country is going this way and that way, and we actually forget about the rationale behind it. But let's talk about going offshore involves and entails obviously dealing with rand and dollars and euros and pounds. Do you think the dollar depreciation has run its course?
Well, it's debatable. I mean, we saw the dollar really weakening against a basket of developed market currencies. From its peak in March, it's already 10% weaker, and we see it consolidating here a bit, but over the longer term, we do see the dollar still depreciating. I mean, we have a few reasons for that. So due to all this liquidity being pumped into the system, the dollar doesn't have that interest rate advantage that it used to have. For instance, the 10-year bond now yielding on its lows was about 0.51% in nominal terms. If you take or deduct inflation, that's a minus 1% return you'll get in a 10 years time. So you don't essentially want to invest in the US markets for their bonds anymore. So we see that, and this liquidity being pumped into the system really causing inflation as well. And we also have some uncertainties in the US in the near future. We have the elections coming up, and also, I mean, some of the debt issues or all the stimulus being pumped into the system were not all grants. It's debt in the system, and that should weigh on the dollar as well in the near future.
Well, let's talk about the elections there for a second. What do you think, will the investors win from these elections?
So I think one area where we see Donald Trump and Joe Biden really, where the policy divergence is not too wide, is infrastructure. They both agree on some infrastructure spend, but that's where it stops. I mean, it's best to really be diversified between asset classes, geographies, and different sectors. I mean, we're using the volatility leading up to this election to really gain exposure to the market. We do expect more volatility leading up to the election. And so for investors, really, I mean, I can maybe mention one example. We know Joe Biden said we want to increase maybe corporate taxes from 21% to 28%. What that will do to markets, and it seems like it might be priced in with Biden leading the national polls, but that might cause the S&P 500 or the 500 largest companies in the US or their earnings to really decrease by about 5%, that or 7% corporate tax increase. So that might have an effect of some companies. But then in terms of if Biden takes a win, we'll see some massive spend, I think, in the renewable energy space, green energy, and we even might see some wage increases. So on if Donald Trump wins. We know the market is really key to his success, and he really floats his ego on it. So I think we can see a rally after that, especially in the tech shares, and we might even see some capital gains tax cuts that he mentioned this week. So I think exciting times, but definitely volatile leading up to the election.
Oh my gosh. You're supposed to be giving us some good news, yeah. You know what the wonderful thing is? I mean, everyone, and I love having these chats because everyone thinks it's all doom and gloom in South Africa, but offshore, it's just, they've got, the grass is definitely not green on the other side. And we're busy at the moment. We've got major riots in the US. What do you think those tensions in the US is going to do to the big rivalry, the Chinese equity markets?
So in theory, political influence and political moves shouldn't be too much of a factor to consider or put too much weight on it in terms of investments. I think we really try to cancel out any political noise, because it's exactly what I say, it's noise. Over the long term, political influence is just noise. We definitely might see some short-term tit for tat and volatility, but in the long term, we still see, especially in China, a very attractive investment opportunities. I think we definitely see China being increased in the MSCI World Index going forward. It's a very small percentage now of the index compared to what they really contribute to the world economy. And they're giving us exposure to secular growth themes like IT, infrastructure, education. And just a fun fact, so about 30 years ago, China introduced quarterly GDP numbers. And Q1 or quarter one of 2020 was the first quarter ever on record that they recorded a contraction. Well, it was about 6.8% year on year. And I mean, it's magnificent. China is really larger on a purchasing power basis than the US. So it's definitely not a country we can write off. And Donald Trump may have his say in the short term. We'll see if he wins what's really in his intentions after the election. But I think still a lot of room for growth and earnings growth coming from the Chinese markets as well.
Okay, so obviously we're dealing with inefficient markets in South Africa and efficient markets abroad in the first world countries, the developed countries. Tell us, what is your guys' opinion on offshore? How do we position ourselves for market upside in the equity space?
So I think that's probably the most crucial, most relevant question in the past few weeks. I mean, if we just look at a few numbers, I mean, since the lows of 23 March this year, 2020, I mean, that was probably the worst day in our lives on the markets. We've seen companies like Apple going from $1 trillion to $2 trillion, up 96, 97%. We saw companies with the likes of Naspers locally in rand terms up close to 50%. We've seen the S&P 500 in the US index up close to 50%, and NASDAQ, a technology-focused index, up around about 80%. So it's hard to really say where do we position ourselves going forward. Is there still upside in markets? And I think what we are seeing, especially over the past few days, is really moving company or money moving out of those tech shares that really ran hard in the past few months and rotating back to cyclical shares, or in layman terms, really the companies benefiting from the reopening of the economy.
Awesome.
Seeing money moves, moving to those type of companies.
Okay.
So and maybe to add on that point, just to where we really like to keep our exposure and really add exposure is to those themes that will drive transformation and growth over the next decade. The 5Gs, the AI, the Internet of Things, those type of themes, they will still be relevant in 10 years' time.
Yeah, I think maybe that's basically they're only starting off now, the whole innovation side of things and the tech side. So we've spoken a little bit about growth and looking for growth. What about yields? What about returns? Where do we position ourselves for that going forward?
So I think to find yield was also a bit harder offshore. I mean, it's less risky, so they have lower yields. Whereas to South Africa, we typically have higher yields because we are priced as higher risk. So now in the US, as I've mentioned, the 10-year bonds reach a yield of 0.51% and real return of -1%. So where do we go? And I mean, with all the money in the system, they can't go to bonds anymore. also the rushing to equity markets. And that's also partially to the reason why markets have really recovered so well. But where do we go? In terms of fixed income, the bond space, we still see dollar-denominated sovereign bonds as an attractive space. And then, of course, equities with sustainable dividends. And, we're looking at the companies like the good old Johnson & Johnson's paying consecutive dividends and with increases for more than 40 years. Those are the type of companies that will always be, albeit a lower dividend, but provide you a solid dividend income offshore.
Yeah, nice. I mean, you can't go wrong with those big giants, The big question on everyone's lip at the moment is, what about gold? What do you guys feel? Is it still worth buying at this stage?
So gold is an interesting one. I mean, it's the best performing major asset class of 2020. And I mean, when is gold really doing well? It's in uncertain times. But in this instance, it's not only the uncertainty. So due to all the liquidity, and I'm focusing on the liquidity because that's the center of what's driving this market recovery. I mean, we have three different risks that's really going along with that, creating volatility and buying opportunity. But the core of this is liquidity. And the path of least resistance is upwards, and we're seeing it in equity markets. So gold is driven by this weaker dollar as well, because remember now gold is priced in dollars, and now it's cheaper for foreign countries to buy gold as well. So it's driven by the dollar depreciation, it's driven by the uncertainty in markets, and also by the inflation expectations, because typically when this money is being printed and money is being pushed into the system, it might cause some form of inflation. And we definitely expect inflation in this time around. After the 28, 20, and 29 crisis, we didn't see inflation, but I think it will be a different story now. So really, gold is providing that hedge in inflation hedge as well. So to summarize, I think gold is basically in a base case scenario now. If something derails this market, I think we can still see a gold price closer to 2,300. And then if the markets really continue to rally and we see upside, maybe a vaccine earlier to the market than what we currently price in, we can see the gold price going down as the risk is being or going out of the market. We can see a gold price close to $1,600. Yeah.
Okay, so it's a little bit of a gamble. It's not as easy as it normally is in these crisis moments.
It's not, but it is kind of an insurance bet on the market as well. I mean, it is still a safe haven. I think it's considered more of a safe haven than the dollar now. We're looking at a Swiss franc and gold being the major asset classes of a safe haven. So if we're going to see a sell-off in markets, we might see a small pullback in markets. It's only healthy, and we definitely might see gold picking up then. And gold is not correlated with business cycles. That's a key advantage of gold, really, to store your money somewhere and not really being in markets, or use it as an insurance policy or diversifying tool in your portfolio.
Great. Quick question on the Rand. What do you guys think the Rand's going to do going forward? Because obviously when we start looking at investing offshore, we need to convert Rands into dollars or pounds or euros. I mean, just a quick one on a dollar. What does a Rand to the dollar look like in the short term and medium term? And yeah, let's leave it at that.
So there's a reason why we were named the most volatile currency in the world, and it's the hardest call as well. But I mean, I think the Rand strength that we see currently is actually dollar weakness, and it's providing a great opportunity for us to take money offshore, I think. In the long term, fundamentals depict we should depreciate against the dollar, but I think below 17, 16.50, we saw it twice now recently. I think it's decent levels to start thinking about taking money offshore. And in the end, it's about building something for the long term offshore. It's building wealth offshore, and yeah. So I think close to those levels, it's attractive to really externalize money.
You know what? I mean, I don't want to stereotype too much, but in our parents' generation, offshore opportunities weren't quite real because it was something that was in the far distance or for the super wealthy. And today it's becoming more and more obtainable for the average person in the street. So if we look at what does the world look like post-COVID-19? I mean, we spoke earlier about going offshore is not just about the emotional side, but being completely rational. But so what do you guys think about post-COVID-19? Where do we stand in the world, and what are the opportunities going forward?
I think one thing we can say for certain, it's more indebted, it's more digital, and I think that those are two. And maybe a third factor I can add to this is less global. I mean, we saw the surge in globalization over the past 10 years, but we're seeing a move back to deglobalization, everyone bringing manufacturing back to home. And with technologies, it's possible to do that. So I think for me, if I always try to put it down in simple terms for me, is we need to look at those companies really providing or supplying the product that will feed the consumer demand. I mean, the US GDP is driven by consumption. 70% of the US GDP is consumer driven. So we really need to look at those relevant companies providing those relevant products. And that will be the big digital transformation that we'll see in the next 10 years. To add to that, I mean, Microsoft CEO Satya Nadella told us they saw cloud growth, 2 years worth of cloud growth in 2 months. I mean, we actually are seeing the earnings that we are paying for now in these tech companies. We're really seeing that growth, and we're only seeing the adoption rate of these technologies being accelerated out of this crisis into the next 10 years.
Yeah, I mean, there you mentioned tech, quite a bit of tech. Where do you think the opportunities lie in the tech space going forward? I mean, the world as we know it will never be the same.
Well, yeah, I totally agree with you. And I mean, the next Apple, Amazons, and Microsofts will probably be started in this crisis. It won't be necessarily the same leaders today that will be the leaders in 10 years' time. So I think for us, a key, we've identified a few secular themes and technologies. And I think one of them, the key enabler to them all over the next decade is 5G. I think that will definitely transform our economies and enable our economies over the next few years. Another theme that I can mention is cybersecurity. We know the incidents rise about 20 to 30% annually. And it's just simple. I mean, we use more devices, we consume more data, we are more users of internet devices. And all of that is creating this big demand to really store the data, and the regulators are forcing us to keep the data safe. So cybersecurity will become a major thing in our lives, and that we can focus on. It's a very, very attractive, high earnings growth theme that we follow. And I think to the center of this is artificial intelligence. I mean, it's hard to see that in your life really, but I mean, in everyday life, we are exposed to artificial intelligence already. So I think that's the key force for us really driving this transformation.
Yeah, I couldn't agree more. I think cybersecurity is going to be the biggest risk that we're going to face going forward. But listen, Wouter, I just want to thank you so much for your time. I know you're extremely busy. So once again, thank you so much for your time. Just before we let you go, do you have any words of motivation for the nation in this current crisis that we're in?
Stay positive and save. I think that's close as possible to get to some motivation. And we've seen it in the past, after the previous crisis as well. The savings rate goes up, and that's ideal. I mean, and there are so many exciting opportunities available out there. I mean, it's the most excited I've been about investments since I think I started my career. I mean, for the retail investor, there are so many exciting opportunities available to invest in. So I think take advantage of that and really get exposure to those type of investment and technologies.
Well, you have definitely left me excited for the opportunities that are awaiting for us locally and offshore. Thanks once again for your time. Everybody, if you like that, please give us a thumbs up. If you want to get notified of any further videos that are coming, hit subscribe below. And if you feel any family or friends will find this stuff valuable, please share it with them. Until next time, ciao.